Brian, Greg, and Brien, thank you so much for coming on today. How is everybody?
Good.
Yeah.
Doing great. Doing great. And wondering how you're going to distinguish which Brian L you're talking to.
Well, I purposely chose you guys because I wanted to confuse everybody. Right? Awesome. So yeah, I'll guess address each one individually with some of these questions here. I guess my biggest concern is we have nothing to talk about in this market. But Brien, Leni, we'll start with you. It's been conference season, right? Beaver Creek. There's been all sorts. Mining New York 1-to-1 just happened. I've been to a few of them. What's the appetite like now? Like 3 months ago, it felt like we were dying by the vine. Are you seeing some kind of improved attitude from investments and from these investors that you're seeing out there?
Definitely. I would say the conferences I've attended, the attendance hasn't been that much different from the spring, although the sentiment has been better. But I put it more to my subscriptions. I would say
that's how you gauge it?
Yeah, that's how I gauge it. That's been a lot better in the second half of the year. And I would say that and the number of views on the different content that I put out is sort of how I gauge people's interest.
Yeah.
And I think absolutely people are looking at precious metals and they want to know, especially on the equity side, what to put their money in. So yeah, I would say things look exceptionally well. As good as I've seen it probably in the sector since probably about 2020. So
yeah. Brien, Lundin, you've got a big conference coming up, so I can imagine you're seeing what kind of renewed interest is back in the space by your attendance. So how's that looking?
Yeah, it is. And we won't know for another couple of weeks, unfortunately, because everybody seems to register at the last minute and therefore pay higher prices. But everything, everybody waits to the last minute. Still, that said, we're tracking well ahead of where we've been for the last couple of years on attendee registrations. So it's going to be our big 50th anniversary, and we're at the start of a metals and mining bull market. So I think all of that is adding to the attraction this year. And what's more important, I think, for my conference is what the attendees do when they're there. I've seen in down years, 2000, 2014, 2013, where they come because we always get a core group of really active investors, but they don't do anything. They yawn and, walk by the booths. In 2015, for example, I noticed that they were actively buying, and that was the long-term bottom of the market at that point in time. And they've been more active over the last couple of years at our event. So I expect at this point, really a rollicking good time by everybody, smiles on a lot of faces, but I expect a lot of people opening the checkbooks because this is the time, when the trend is apparent. And it's unlike any other trend, by the way, that we've ever seen in metals and mining. This is unprecedented, where we have gold breaking through all-time records on an almost daily basis, yet the miners still really in the doldrums and just moving. So, part of the thesis you're hoping for, rising metal prices, you can already check off that box. This is a real window, a generational window of opportunity, in my opinion.
Yeah, I'm certainly looking forward to the next few years in this sector, right? Greg, I'm going to go back to you. Silver has caught the main stage here. Is this just catch up? Is it just about time? Where do you see this going?
Yeah, no, it's exciting to see silver finally going to play catch up with gold, performing better than gold, even though gold's hitting new all-time highs almost every week here. So, what we're finding out behind the scenes is the silver short position is way bigger than what we ever thought or knew. And the 8 bullion banks that have been shorting silver for decades, we've kind of gotten some scoop on how they've been able to pull that off, where they're getting the metal from, concentrate, doré bars. And it looks like these 8 bullion banks that have been doing this, they're going to have to stop, or else they're going to be financially ruined with these horrendous silver short positions that are going to have to be covered with physical, where there's no physical to be had. So it looks like we're going to finally eclipse. Silver should blow through $50 here fairly soon. I would guess maybe before the end of the year, but certainly going into the new year, we'll probably see, the old 1980 inflationary high
Yeah.
finally eclipsed, the only commodity that hasn't done that, which tells you what a good value it is.
So what did you uncover about the silver short positions that you can share?
Well, they've been doing this activity. Brien and I used to know Bill Murphy. GATA. We used to go to the conferences when they got a bunch of high net worth people to pay for some high powered lawyers to go to court over this, and GATA was right. The market was being manipulated, but the people who participating, got a slap on the hand, right? So we always wondered how they could do this. Because when they short paper contracts on the COMEX to knock the physical price down, those contracts have to be paid back in physical metal. It's not a matter of paying back with money, right? And so the big question was, how are they getting all this metal? When you look at the LBMA inventories and the COMEX inventories, for each ounce of silver, there's, there used to be 20 times, now it's 30 times, 30 people for every ounce of silver. Well, obviously a lot of people aren't going to get the silver they need on those exchanges. So where were they getting this metal? Well, it recently was discovered that they were going to these producers who had concentrate. Concentrate is liquid form. It's not finished product. And doré bars that wasn't being shown on the Silver Institute supply demand situation, right? And that was to serve the military industrial complex, which takes 500 ounces of silver for each Tomahawk cruise missile, right? So obviously they have motivation to keep a low silver price to buy all their weapons and their satellites and all their technology. Silver is such an important component of that. So anyway, what's happened is China and India found out where all this physical was getting acquired, and now they're going into the market and trying to buy up all the concentrate and doré bars that they can. So that's putting more and more pressure on the perpetrators of the COMEX there.
Yeah. And Brien, Leni, I'm going to point this question to you is like, this market is so tiny. Like what happens when like silver allocation goes up, by a percentage, right? Like how much does that take out of the market? It's just incredible, right?
Yeah, sure. It can have a huge effect, and that's what we've seen in the past with silver moves. Is that things have moved leaps and bounds, and especially when you compare it to some of the moves in gold, it's been that much more powerful. I think for me, anyways, I don't put too much emphasis on where I think metal prices are going, though. I tend to invest, as long as the fundamentals are in favor of that particular metal. I'll put money in there, especially if I can find value. I've found over the years that being too obsessed about where silver, gold, or where every metal might go has been the recipe for losing on the equity side. And so for me, just buying value, like if you're going to parlay a bullish thesis into buying equities, that you want to buy a company that's selling for less than it's worth, because the metal price is just one tiny component of how a junior can lose you money. And so that I think, investors that are looking to capitalize need to keep that in mind.
And then Brien, do you think people are going to sell too soon in this run? Like, I just gonna get that sentiment that like people have been holding on to some paper for so long and they're so beat down. And when they get to these points where they're breaking even, they're just going to be out.
Well, I think there's just a couple different ways to look at it. I think for people that don't know actually what they have and what the actual value is of something, yeah, you could sell too early, just for the emotional state that you just described. I think if you actually have an idea of what you're holding, what it's worth, and what it should be worth, if the company capitalizes on the catalyst that they have in front of them, then you should probably be fine. And outside of like a huge push for silver to go over $50. Who cares if you miss the very top? To me, anyways, I'd rather take the profits, take them off the table, because taking profits is much better than riding that roller coaster up and then coming right back down on the other side, which I think, depending on who's watching, we've all ridden that roller coaster and unfortunately haven't taken the profits because you think the thing is just going to keep on going. So understanding first what's all about the company, what those catalysts are, and what the actual value is the most important thing. And then if it's reached what you think the value is and you sell, be good with it, especially if you've made a profit.
Yeah. Yeah. I want to touch base about, the things that you look at for value, maybe a little later in the show.
Sure.
But I want to talk about geopolitical risk with Brien Lundin here. We've seen a lot of resource wars in base metals and other types of commodities, right?
Mhm.
When are we going to start seeing it in precious metals?
You mean in terms of reacting
Yeah,
to?
we're going to own this asset because we want to keep it here, and we want these
Oh,
gold.
yeah.
Yeah, like we see tariffs on graphite and antimony and all these things, right? Do you ever see that political war in silver and gold?
Well, I think so. I mean, but what happens typically is as prices go up, then you see countries start nationalization, confiscation, renegotiation of terms. That's a cycle that just comes over and over again. We've already seen that to some extent in West Africa. Not so much keeping it at home, but saying, well, why aren't we getting more? You're making so much money off of our mind. We don't really care about what the deal was because that was the last regime.
Yeah.
And what are you going to do? Take your mind and move it elsewhere? So uh, that sort of thing is going to happen, and that's going to compress margins, and margins will expand and they'll compress as these sorts of events happen. In the regimes like the US and Canada, North America in general, Mexico is kind of a special situation right now. I think there will always be somewhat of a premium for that. And I think you'll see that expand in the market as we go by because of what we're going to see. It's not so much critical metals because you can get gold and silver if the Treasury wanted it in the US. They could always get it. It's a liquid market. But for other metals, like the critical metals that are controlled largely by China, you simply can't get it, whether you want it. And in those cases, you absolutely need it. So security of supply, I think, will always be more important for the energy metals, for the critical metals. But the gold and silver markets are such a liquid market around the world that any nation, any investor that wants to get it can get it. They're going to have to pay a higher price day by day, I believe, but they can always get it.
Right on. Greg, I'm going to go to you, and I'd like your opinion on some of that geopolitical risk as well. And when you're doing your investing, Greg, like particularly or recommending to your subscribers, are you geographically agnostic, or were you focused on?
I focus on Canada, US, Mexico, South America mostly. I've been all over the world with recommendations, and I just find it safer for my subscribers. We've done well in those areas. I really love Nevada at this point. Obviously, the big producers like Nevada as well, just because it's such a good place to do business. But we're seeing, the BRIC countries. Okay, they've really aligned together, and they would like to see an end to. They want to see a free market for the precious metals, base metals. The COMEX obviously is not trusted any longer. They've blown themselves up, and there's a switch from the west to the east in that regard. And then Shanghai Gold and Silver Exchange is gaining more and more momentum, which is I think a huge deal that we'll see how that all plays out.
Yeah, I think that momentum thing is actually really interesting, right? It's gaining steam. Certainly, right? And we all know mass psychology, right? Everybody wants to see what everyone else is doing.
Right.
So as this gains momentum, I think it could get a little uglier and a little uglier. Brien, Leni, I want to go to you. You talk about value when you're making your investing in the gold and silver. What are your kind of key check boxes there?
Sure. So I'd break it out. There's quantitative and qualitative side to it. The quantitative is pretty straightforward. If the company has a resource or a technical study, you can take those resources and construct a discounted cash flow model on those resources using the criteria that you think are most applicable. And there's a variety of things that you can do. Once you have done that, you should have an MPV at a certain discount rate that you pick. For me, I use 10% as the baseline for any analysis that I'm doing. You get that MPV, you divide it by the number of fully diluted shares, and you get a price per share fully valued for that company. And then from there, you can discount that according to where they are. If they're just a resource stage, or if they've got a PEA, if they got a PFS, and each of those has a higher confidence level. So you take 10% or 15, 20% of that overall MPV, and that becomes a price target. The other side is the qualitative side, with the management team, for instance. High quality management teams that have had success, that have done it before, you can put a higher premium. So if your range for a PEA stage company is, let's say, 10 to 20 or 10 to 25% of that overall MPV, you're probably good, if it's a good management team, to look at the top end of that range, in terms of what the value you place on them. Same as jurisdiction, like what Greg was touching on. The parts of North America have definitely served better in terms of investors' view, Nevada being a big one. So again, that's what puts higher confidence on the range that you put on that MPV. So that's how I look at value. It's sort of straightforward. The qualitative side can get more. There's more ambiguity on that side of things.
Sure. Yeah.
And it becomes very much more subjective. But for most people, if you can stay on the quantitative side and keep it objective, it'll help you, I think, be successful more often than not.
Yeah. And how do you get at that qualitative side? Like, you got to be spending time with management, talking to management, really get in their face.
Right.
And I think a lot of investors don't get that opportunity, right? So I think
Yeah.
that's the value of all three of your letters, is you guys do get to spend time with management. You guys do get to go on those property visits, right? And do your due diligence, spend time with those management teams, because we can learn who these guys are pretty quick, right? Maybe not over a phone call or over a presentation, but spend 2 hours with them at an airport.
Yeah, well, that is
figure out who they are. Right?
Yeah, it's an excellent point. Like, the first and foremost, I think for most investors, the conferences such as Brien's, these are excellent forums for you to go there and meet management, meet the commentators that you're listening to on a daily basis, and start forming a network and, with like-minded investors. I think that's first and foremost. The general retail investor isn't going to be able to go to site, and that's just the reality of it. I started a video series called Field Notes, and it specifically follows me to site to kind of bring investors to what that actually looks like. And I think the series does a good job of doing that. Last week I was in Japan. There's a company I'm invested in. Went over there, spent 5 days with management and some fellow investors, and it's phenomenal, that experience and what you bring back with it after. And while that's not available to all the retail investors, certainly reading articles about it or learning more about what you see from the in-person visit, I think, can help any investor.
Yeah, it's actually surprised me. Like, a lot of retail investors, they're willing to throw $10,000, $30,000 at something because they read about it on Twitter. But they won't spend a couple $1,000 going to a conference and sitting down with management, right? It's
Yeah.
kind of shocking. So yeah, that's a really good point. Greg, what about you? What do you do to kind of get to know management and how to suss that part out?
Yeah, no, it's definitely getting to know the right people. For me, the people is the highest priority for me. When you look at working geologists, 94% of them will work their entire careers and never get credit for an economic mine that becomes a producer. So I follow what we call the 6%ers, the 6%ers that make these discoveries and do it over and over and over again. And I get to know these guys. I hang out with them. I do things with them. We go on site visits together. Like you said, you really get to know these people. And I keep making money by following them. Over and over and over again. They keep making me money. So why would I turn away and go with someone new?
Yeah,
And
totally.
it's part of the 94%. Not that somebody can't do that. Chris,
You're increasing your risk once you get in bed with somebody else.
right.
Yeah.
So, and then there's a lot of people you don't want to touch with a 10-foot pole in this business, unfortunately. Fortunately, they're not a big part of the group, but again, stick with the people who have had success and had success in the mineral that you're interested in. If you're interested in gold, then make sure you have a 6%er that's made a gold discovery before.
Or two.
Some there a gold guy's going into uranium, never been in uranium before. That's a warning sign, right?
Yeah, we were talking to a fund the other day, and they said, "Oh, we just ran to a gold company a uranium company that only had gold assets."
Yeah.
Interesting rename. Brien, London, what about you? How do you get to know these management teams? How do you suss these guys out?
Well, I think a key point here is that I make over and over, especially to people who are new to the sector, is that it's a very inefficient market. So, as Greg just alluded to, if you're willing to spend a bit of money to subscribe to the best newsletters out there, and there's really, only a handful of much more of those, uh, then you can get real insights. If you spend a little money to go to the conferences and meet the companies, uh, you can find not only the best teams, the lowest risk investments, the highest potential investments, but you can find ones that the market are completely overlooking or has yet to price correctly. So, that's the way I do it. But, I have the benefit, and I look at it, I realize it every day when I look in the mirror with a mild scream. And I've been in this market for decades. And, if I don't know somebody, then I know their best friend. So it's that kind of thing of being, like our fellow panelists, being in this market for years and years. You get to know people, you get to know them on a social level, you're friends with a lot of them. If there's a new deal coming up, a new company that looks really exciting, we tend to learn about it, before most other people do. And it's our job, frankly, I look at it that way, and I know our fellow panelists do. It's our job to find those opportunities for our readers, and we take it very seriously. And that's what I do every day when I wake up in the morning and sometimes late at night. But a lot of it is an important piece. And obviously I'm kind of talking my own book here, but going to these conferences, you get to meet the companies, not only at their booths, but at the bar, or in the hallways. And you can see a number of different speakers at one time. And if a few of them talk about the same company, you can bet that, that's one you need to look at.
Yeah.
And you can compare track records and the like as well.
Yeah, that's a really good point. Brien, Leni, so speaking of management teams, like who do you follow? Like who are some of the good teams out there?
Sure. My biggest position is in a company called Kinvestor Minerals. Zach Flood is the CEO, and he's got a team of 5, 6. There's quite a bit on the technical team, but I would say they're arguably the best gold exploration team that you've got out there, specifically with exploration undercover. So many of the outcropping deposits have already been found, especially in the really good jurisdictions, Canada and the States. Zach and his team are experts at finding stuff undercover, and they've employed the project generation business model, which de-risks the major risks that come with exploration by doing good fundamental groundwork and then JVing the projects off to the senior miners. And if you look at the list of companies that they have JV'd with, it's all the big producers out there, the teams that you want exploring your gold projects because they have the pocketbooks to do it. Again, they've got around 20 million in cash, and 20 million in cash with an exploration team like that it goes a long way. So I would say Kinvestor Minerals is definitely up there. And then one other name to sort of put out there was new to my radar this year is the team at Thesis Gold. Ewan Webster is the CEO, geologist by trade, good track record, and they've outlined almost 5 million ounces of gold and silver in northern BC in the Toodoggone region. I think it's an excellent company and something that's probably going to get better with time.
Toodoggone heating up for sure. Sun Summit also just hit a big hole in that area as well.
Yep.
So yeah, and that's Thesis Gold, right? That you were just talking about,
Thesis,
Brien?
yeah.
Greg, who are some of the management teams that you like to follow?
Oh, let's just take it by region. Nevada, I've had success with guys like Robert Eady, Steve Kaler. They're on the team with Westward Gold right now that is getting a lot of attention. They had a discovery hole last year that got their stock price. People looked at it. They have an incredible land position within the main Cortez trend, which is unusual for a tiny junior to have that big a land package. But it's for real, and they're using multiple methodologies to show where we should be putting drill holes, and they're getting the attention of the majors. The majors are assigning CAs and romping through their data room. And, you know, we were just up at the Beaver Creek Precious Metal Summit, and they were packed with meetings with all the big boys. So that gets my attention. Other teams like Dave Cole, EMX Royalty, I mean, he's as solid as they get. He knows all the right people. Peter McGaw, Mr. Silver, Mr. Mexico, you know.
For sure.
I've made so much money with Peter over the years, you know, when he calls me up with a deal, I'm all ears, right?
Yeah. Yeah.
I'm not going to say no. You know, and you know, the Great Bear success with Chris Taylor. Chris Taylor wasn't a 6%er. Now he is, you know, he's,
Yes.
he was a new guy, right? That's
Yeah.
what I'm saying. You can still find good people within the 94%. And Chris Taylor is an example of that.
Yeah.
You know, it just depends on the region. I try to find the experts in those regions. Yeah, it's what we're trying to do. All of us as newsletter writers, we're trying to handicap the odds for our subscribers. And you have to know the people. You have to work with the people who have had success. You've got to get all the things to line up, get multiple methodologies before you start poking drill holes and spending money, especially in a bad market, right? So I like it when companies take the time. They're not rushing for a drill program. Westward Gold could have drilled easily this summer, but they decided to get multiple methodologies, and now they've got not just one, they have 4 targets that the majors are looking like they want to support. So
Awesome. And that's WG, Westward Gold, is that correct?
WG, yeah.
Cool. Brien, Lundin, I'll go to you. Then we're going to start talking about gold and silver. Any of the management teams or stories out there that are kind of on your radar right now?
Yeah, you know, some of the teams that I follow, the Discovery Group, Greg just mentioned, Great Bear was a great success, but they've had a number of successes. They have a very large project portfolio. I'm very friendly with everyone there. Not Inflection Resource, that's another group. Inventa Capital is another good group with some big successes. And, you know, the new Justra group of the last few years is very well capitalized and great projects, great management teams. Newquest Capital is another kind of new one, on not necessarily new, but very good technical teams in a few companies, and it's stable. So yeah, groups like that. Bob Quartermain is, you know, whenever he's involved in something or investing in something, you need to look at it. That's some of the companies you need to look at. There are some other groups out there that are either very good investors, and when I say groups, more like individuals who are very good investors who bend to my ear on occasion and tell me this is a hot new deal, look into it, and I'll look into it. And I don't always agree or always get involved or always recommend it to my readers, but they're always worth looking at. And that's what you get with experience. You know, over the last couple of days, I've had a couple of new deals that have been presented to me that, you know, I'm doing the due diligence on and will be coming out with probably over the next couple of months, one way or the other, either recommending it or passing on them. But these are the kinds of things that just aren't on the radar of everybody out there. They frankly aren't at the investment conferences yet. And that's my goal. You know, it's a broader goal. And this is what I tell everybody in my kind of network in the industry. If you have something early, let me know about it early, because a company, if we can expose it to our readers at a very early stage, you can literally have 100% gain before that company is really out there making news, or even you know, attending conferences or talking to other people. And that's the key, that if you get earlier, the earlier you can get, the greater the potential, the lower the risk. But you need to do that with groups that can actually, they just don't have an idea. They can actually crystallize that idea and make it real and finance it at a good level. So that's a key in this market. And I think it's going to be a more important key as this market heats up. A lot of the people in the sector right now have never really experienced a bull market. They haven't experienced the early 2000s. They haven't experienced the early 1990s, that brief market. They haven't seen what can happen when the rising tide is lifting all boats, when the wind is blowing so even the turkeys fly. So you don't have the downside risk that we've obviously had over the last 5 or 6 years. When you're a loser in your portfolio, doesn't move, doesn't lose any money, or maybe just doubles, that has a tremendous effect on your bottom line, because in that kind of environment, your winners are just doing spectacularly.
We're going to go to you, Brien, here, Leni, for this. What's your view of owning physical gold versus stocks? Like, do you always want to have a little bit of physical exposure to this market?
When you say stocks, is that like an ETF or the
Sorry.
broad trust? Is that?
Do you own physical gold as part of your portfolio versus I don't care about the rest of the stuff?
Yeah, no, physical I think is paramount. I think you want to have it on hand, that tangible thing versus the paper that's, out there somewhere. I even teach my kids, we homeschool our 4 kids, and physical metals, gold and silver, is something that at least the oldest one is getting exposed to, and it's something real that they can put in their hands. And I think the same goes for any adult too, to have that tangible, real money, in my view, in your hand, is important, especially for whatever might be ahead. Having that on hand instead of in an electronic form, I think is something everybody should do.
I would agree with you myself. Greg, we're gonna go to you on this question here. And is the argument for gold and silver the same, do you think, Greg?
If they're both precious metals, you go back in history to the 12 tablets, common law, Rome, gold, silver, copper, or money, right? And right now, the world looks at gold as a tier 1 asset. The Bank of International Settlements, which is the central bank to all the central banks, the head of the beast, so to speak, listed gold as a tier 1 asset, meaning it's the ultimate form of money. Silver, platinum are still looked at as industrial metals, but they're precious metals. And I believe with what's coming, their identity as a precious metal is going to be lifted to that status once again. Just because the world at large doesn't look at precious metals other than gold, silver and platinum will rise to that occasion as things get dicier and dicier in the world system. So, I'm a guy too. I'm at both sides of the investment pyramid, top and bottom. I own Amerigold.com. That's a bullion dealership that I've been teaching my clients that, when you get a big hit, pay off all your debt, start building up the ultimate bank account of your last name, physical gold and silver, that you store and protect from fire and theft yourself. That's the ultimate bank account. It's the ultimate form of money.
Guaranteed.
And, so that's the bedrock of the investment portfolio pyramid, right? Well, I'm at the bottom. That's conservative. On the other end, I'm high flying, high risk, high reward junior mining stocks that some people think, are you crazy? But I recommend both. And when you make a big hit on those high flying stocks, invest in the ultimate form of money. J.P. Morgan in 1912 was asked by Congress, what is money? He said, gold is money. Everything else is credit, right? Well, the modern mind doesn't understand that. The system of credit, in my view, is about to collapse. And that's because what is credit? It's fiat currencies. It's your stocks, right? There's a debt, there's an obligation, there's a derivative, there's a liability behind all those things, right? Whereas when you own physical gold or silver, there is no liability behind it, right? As Doug Casey always said, gold is the only asset that is simultaneously not someone else's liability, right?
Yeah.
This is going to play a big part. That's going to become apparent as we move into the next year.
Yeah, right on. Brien, Lundin, what did we learn about BRICS this week?
Nothing. In my
Yeah.
view, I was
Agreed.
skeptical that, you know, we have all of these things. We have the Basel III, we have BRICS, we have all these hopes that gold bugs are, you know, pinning their hopes on all these potential developments, that all of a sudden you have this sudden breakout and it's going to catapult gold prices higher. And they all seem to kind of fade away. Eventually, they're just themes and market noise, I believe. And I think, and it's not to disparage the future potential of gold and silver and the monetary metals, because what we can rely on, and what actually makes all of these other things that we tend to pin our hopes on unnecessary, is the fact that we're at the tail end of a 4-decade plus process trend of ever easier money. And as part and parcel of that process has also been a trend of ever greater debts. And right now, the US, the issuer of the world's reserve currency, is in a debt spiral where it is borrowing money to pay the interest on the federal debt. And where is it getting the money to pay the interest? It's borrowing that. So it is literally a debt spiral. And, you know, we've been able to get away with it for a long time, but even the issuer of the world's reserve currency, at some point, these numbers matter. But the bigger picture is that situation is cookie cuttered across the world of other developing countries that are in similar situations, some better, some worse, but similarly. And what happens is, at every financial crisis, more currencies created, and each time the currencies lose more and more of their credibility. So that's the trend we're in. We're in the end game now. That's what's going to drive the monetary values higher relative to the fiat currencies. And I don't think that things like BRICS, Basel III, and all these other things really matter related to that. Yeah, I think that at some point, if the BRICS currencies, primarily Russia and China, the BRICS members, want to get away from the dollar, they're going to have to base it on gold, because they don't have the credibility, the trust of the other actors in that. So that's the trend. At some point, if they continue it, they will have to bring gold in. But I don't think it's anything we need to worry about right now or get excited about right now. There's plenty of reason to be excited about where gold and silver and the associated investments are heading.
Yeah. Perfect segue to my next question, and I'll start with you, Greg. What are you most excited about right now? And it doesn't have to be like a company specific. It could be timing, valuations. Like, what are you excited about right now, Greg?
Well, the fuse is lit with our junior mining stocks, in my view. And, you know, we've suffered for a long time. It's been difficult. You know, a lot of newsletter writers have left the business. It's been tough to hang in there. You know, I'm most excited about the fact that we have such an anomaly here, where these mining stocks have been beat up beyond recognition.
Yeah.
I've been trading these things for over 40 years myself, 24 of which as a newsletter writer. I've never seen such good companies at such low values. So the value is there. What's going to spark it? Like Brien mentioned earlier, there's this huge disconnect. Here's gold at 27.50. How can these mining stocks not be moving? How can the producers with, you know, some of these producers have $18 billion war chests, right? How can they not be moving, right? Total disconnect. So I see that we're right. As an investor, you want to be able to buy at the lowest level right before a big move. Well, I think that's where we're at. I think there's an incredible opportunity right now, and it's hard to sell that, because we've been saying, hey, the bottom was last year, the bottom was the year before, right? We thought, no, it looks like the bottom is here. And so with the fuse lit, as I said, I think we're going to see come January, late January, after all this election nonsense in the US is over, we'll see where things stand. And you know, at the Beaver Creek Precious Metals Summit, it was clear to me that these funds now have the appetite. They see what's going on. They know why gold's rising. A rising gold price, rapidly rising gold price, tells the citizenry something's wrong. Well, something is wrong.
Yeah, for sure.
incredible opportunity in precious metals and precious metal mining stocks right now.
Yeah, so timing for you. Brien, Leni, what are you most excited about right now?
I think exploration has me the most excited. There's a number of companies within the portfolio that have drill results either coming up or they'll be drilling in the near future. And I think in terms of, and this is it's a gray spot in terms of valuing exploration companies because they have nothing. But the potential
Oh,
out
they do.
the potential out there, I think the exploration companies are somewhat forgotten, and we could be in store for a great run in the exploration side of things. And I think that could be what captures investors' attention after being blasted out, the last 2 or 3 years.
Yeah.
I think that might be the springboard to really bring people back into the market, after some trepidation, after, what they experienced in the immediate past.
Yeah, right on. Brien, Lundin, what has got you most excited right now?
Well, I'm excited about a fishing trip. I'm starting in a couple of hours.
Yes.
That's good.
What are you going for?
More
Red?
to your, I know you would appreciate that, Arlen, but more to your point, I'm excited about the entire sector right now. We're just starting to get a reaction it's starting to filter down into the juniors, the sandbox that we all play in. We've gotten the big generalist money, the big funds, the speculators, the Western investors started buying the majors in August. They started buying physical bullion through GLD in July. They're all trying to price in the pivot, this easier money environment. And now they're working their way down the food chain, and we're seeing that. But what we're also seeing is that none of these companies have been nearly re-rated to where they should be in a normal market, much less the kind of market that we're actually in. In particular, I think the companies that are big resource plays, they have big resources in the ground. In some cases, they were optionality plays where they built these big resources because they were out of the money. Every out of the money optionality play is now wildly economic at these prices. So that's something that's just completely been unrecognized. So if you have companies, that have huge resources, just banking resources in the ground, they're all workable now. And yet the market, because this move has been so stunning and in many cases confusing as to the origins of the move, they have yet to be re-rated by the market. The other really high-powered sector, I think, is the silver stocks. Now that silver is really just a couple of weeks into responding to gold really enthusiastically, these silver stocks are ready to just multiply in value. And as this trend continues over the next few months, you're going to see that. And there are some great companies out there in that sector as well.
Mm-hmm, mm-hmm. We'll probably end with this question here to Brien, Leni, if you don't mind. What do you think the biggest mistake investors are going to make over the next couple of years?
Not selling. Yeah, I think most investors, what I described in the beginning was, riding this roller coaster. I think especially for newbie investors, selling is not part of the equation because they think blue sky, that prices will always go up, and unfortunately they don't. And that's metal prices. And again, junior mining companies can lose you money in so many ways, whether it's political risk, management incompetence, just being unlucky for a number of different reasons, permitting. There's a number of ways that junior equities can lose you money. So you have to understand what you own, what it's worth, and when to sell. And when it hits that mark, you sell it, even if you are indeed early. Take the profits and start looking at what's next, what's cheap. And that's how you continually make money and be successful in the junior resource sector, in my view.
Yeah, and that to you is building your own bank account.
That's right.
That's awesome. Really appreciate you guys coming on today. That was an awesome conversation, and look forward to probably bringing you guys on individually to my show just to talk more about your model and what you're liking individually, just within your portfolio, and how we can help on that. Thanks very much, guys. Take care.
All right. Take care.